Indonesia jumps to a record high. India warns 20 banks that they face heavy fines in a stock market scandal. And Japan and the United States agree to try again at trade talks. Well, European trading in Asian shares was cautious overnight, with investors skimming profits on recent gains. Bullish sentiment sent share prices surging by over 2% in the Philippines and Taiwan Monday, with the Taipei index hitting a 4-year high. Over in Hong Kong, stocks there posted moderate gains, the Hang Seng Index edging up 0.2%, but investors are wary ahead of today's government land auction, which could indicate the direction of real estate prices. Meanwhile, brokers in Taipei say heavy buying of electronics and financials helped push the leading index to 6688. That is its highest level since June of 1990. The Taiwan market has gained 11% so far this month, and most brokers expect the good times will keep on rolling, fueled on by optimism over corporate earnings. Elsewhere in Asia, Manila shares benefited from heavy buying of blue chip stocks. The leading index there soared 2.3%. Big gainers included Brewer San Miguel and Philippine long-distance telephone. Well, joining me live from our Hong Kong studios now to talk more about the market in Hong Kong is Philip Chan. He is Research Director with PBI Securities in the colony. Philip, welcome back. Good to have you with us again. And welcome to Asian Business News.
Good morning, Martin. Thanks.
Right now, today, top of the news, the land auction. Property stocks on the Hang Seng have been sold down or oversold recently. What are you expecting out of the auction, and what kind of effect is that going to have on the prop sector?
Actually, property stocks have been performing quite well in this third quarter in the market. I think for today's auction, if property developers are expected to bid, as you say, quite conservatively, and I think if they bid reasonable price, then the property stocks will just find some support. But I don't expect them to rise substantially on the news of today's auction. I think really we're just looking for continued consolidation at around these levels for the property sector.
Mm-hmm. Okay, Philip, now in this kind of environment, basically we're talking about interest rates, or the threat of interest rates ratcheting up following the U.S. Do conglomerates look good, and are they good defensive plays?
Yes, we've actually been recommending conglomerates since the beginning of the year. And I mean, to a certain extent, you're right, because they are slightly defensive. They have a wide spread of businesses, and they have been actually performing very well this year, as against last year when only one or two outperformed the market. So your point is quite right.
So the theory being, of course, that because they're diversified, they are less susceptible to interest rates hitting their bottom line, less susceptible than, say, specific industries or businesses.
That's right, because they have cash flows which can service the business, and as you say, they've got a wide spread of businesses.
Could conglomerates also be starting to look attractive to investors simply by default, simply because utilities and banks and property stocks do not look like such good alternatives in this kind of environment?
To a certain extent, you're right as well. It was thought that utilities would provide some measure of comfort in this kind of defensive market, but then since you've had a rise in interest rates, they're beginning to look out of favor, and as you say, with banks going out of favor and property stocks having their own problems, conglomerates have to be focused on.
Okay, let's talk about institutional money flows right now. I understand that we are seeing a lot of Japanese institutional money flowing into Hong Kong. Are those funds being reflected in the market?
We've had some flows in the last couple of weeks because of new funds being raised by some of the Japanese brokers in conjunction with other houses in the region. And that was shown in the pickup in volume over last week. However, I think that this is staged investment, so it won't be so quick, and you could see it tailing off yesterday.
Okay, Philip, one quick last question before we wrap up with you. The market's been consolidating since picking up sharply from about 8,500. Where do you see it going?
Well, we see it picking up further, up to about 11,000 by the end of the year, because I think that all the negative news is out, and it'll just be a filtering effect, though. It won't be just one long push up.
All right, Philip, thank you very much. Good to have you back, and hope to talk to you again sometime soon.
Thanks.
That was Philip Chan. He's Research Director with PBI Securities, joining us live from our Hong Kong studios. And now for a closer look at Japan.